السلام عليكم مرحبا بكم في قناة Forex.
In this section, I want to cover what I call the Kennedy channeling technique. And it's a very simple way of drawing trend lines that will actually help you identify Elliott waves. So let me go ahead and start showing you some of the basics, and it's very simple. Here we have, and let me move the slide over. Here we have a basic 5-wave Elliott wave move, or a 5-wave move. Here's my wave 1, here's my wave 2, my 3, ABC for a 4, and then a 5. This is your classic impulse structure according to the wave principle. Now the first line, or the first channel we're going to be drawing on this background is what I call the base channel. And simply put, all you do is draw a line from the origin of wave 1 to the extreme of wave 2, and then take a parallel of this line against the high here or the extreme of wave 1. Now whenever I draw my channels, I like to have a midline separating or defining the midpoint of the channel. And just to go ahead and give you an idea of how I do it, again, beginning from the origin of wave 1 here, I draw a line to the extreme of wave 2. Then take a parallel of that line and raise it up to the extreme of wave 1. So this would actually be my first and second waves, and this is what I consider to be a base channel. Now the reason the base channel is so significant, it's really the upper boundary line right here. I refer to the top line as the upper boundary line, and the lower line is the lower boundary line. Now what occurs is whenever price action moves through the upper boundary line, then what you can begin to do is with confidence identify this move as a third wave rally. So that's the importance of the base channel. Also too, and I'll show you shortly again how the base channel comes into play with regard to wave 4. But again, with the base channel, simply begin with the origin of wave 1, the extreme of wave 2, and take a parallel. And again, the reason this base channel, this initial channel is so important is because once prices begin traveling above the upper boundary line here, then with confidence you can identify the move as a third wave move. Now next I'd like to show you the second channel of the Kennedy channeling technique, and that is the acceleration channel. The acceleration channel is important because it encompasses wave 3. And just to go ahead and give you a visual, here's my first wave, and my second wave, and my third wave. Why is the acceleration channel so important? The acceleration channel is important because it defines the progress or the duration of wave 3. When prices begin to break out of the lower boundary line of the acceleration channel, then again with confidence you can label the subsequent move as a fourth wave, which we'll do here. Now if some of you are familiar with my work with regard to futures junctures, you know oftentimes in my work I identify something called the corrective price channel. Well, that stems from the channel we draw to identify wave 4. Here's my wave A, and my wave B, and my wave C. And this would represent my fourth wave. Now, as long as price action is contained by parallel lines, it is considered a counter trend or corrective move, and once complete will be more than fully retraced. So the way our wave structure is working here, this will be our wave 3, and here's our fourth wave. And just to reinforce what I mean by this, is that again, corrective price channel, it tends to be contained by parallel lines. Now this is a minor throw over here up at the top with regard to the upper boundary line, but if you have sustained price action, then with confidence you can no longer call this a wave C advance, but a wave 3 advance. And If I'm moving a little too fast, I don't mean to, but I will be showing you later real-time examples of this in action on actual price charts. But initially, I just want to go ahead and reinforce the foundation of my channeling technique to give you an idea of how I apply it. Now, the last channel we're going to be actually applying is going to be actually a terminating channel, and you're familiar with this with regard to the wave principle, because this is the channel that R.N. Elliott actually drew with regard to his wave structure. And simply put, what you simply do is draw a trend line from the extreme of wave 2 to the extreme of wave 4, and that identifies your resistance for your fifth wave right here. So in a nutshell, that's exactly how I apply my channels to identify Elliott waves. And just to go back, let me clean this chart up a bit. And what we'll do, again, we will walk through some real-time examples, but simply put, if you have a structure like this, your initial channel is going to be your base channel. When prices break above the upper boundary line, then you can again with confidence identify this move as a third wave move. Once wave 3 is in progress, we'll draw a line from the top of wave 3 to the extreme of wave 1, and drop the parallel down to the extreme of wave 2. When prices break the lower boundary line of the acceleration channel, then you know with confidence that wave 4 is underway. And wave 4 will last until it breaks out of its deceleration channel or its corrective price channel. Now, one thing you'll notice when we begin applying these price channels on real price charts, you'll notice that oftentimes what you'll see is that either the upper boundary line of the base channel will provide support for the fourth wave at one of these points. Either the upper boundary line, the midline, or the lower boundary line will provide support for wave 4. And then once you have wave 4 in place and prices have broken above the upper boundary line of the deceleration channel, then you simply draw your final channel, your terminating channel, to identify resistance for wave 5. And that's how the channeling technique actually works. In this section, we're working with the Kennedy channeling technique, and what I'd like to do is actually apply the technique to a real-time price chart. Now, as you can see from this low here, the Elliott waves are fairly pronounced. Here's waves 1 and 2, 3, here's a fourth wave decline, a fifth wave rally, and that's followed by a 3-wave decline ABC. So here's the basic structure we're working with. Now from the channeling technique, I'd like to go ahead and apply that and show you how dynamic it can be. Okay, here's our base channel. In our base channel, again, you draw your initial line from the origin of wave 1 to the extreme of wave 2. Take a parallel of that line and extend it upward to the extreme of wave 1. So here's my waves 1 and 2. Okay, once prices begin trading and penetrating the upper boundary line of our base channel, then we know that wave 3 is indeed in progress. We also know that the base channel, more often than not, will provide support for wave 4. As you can see, it clearly did in this instance here. We came right down to the midpoint or the center line of our base channel and then turned up. But before I get too ahead of myself, let me clean this up a little bit and redraw those lines. Again, this is our base channel. There we go. Here's our base channel. And again, once we break out of the upper boundary line, with confidence we can identify the ensuing price move as a third wave. So here's waves 1 and 2. Here's our base channel. Now as wave 3 develops, what we will do is draw another channel here, and that will identify, that's the acceleration channel, that will identify or encompass wave 3, the price action within wave 3. Once the lower boundary line of the acceleration channel is penetrated, then what we can at that moment do is identify wave 3 as complete. There we go. So let me just highlight some strong points with regard to the application of the channeling technique. Once prices move above the upper boundary line of the base channel here, we know with a high degree of confidence and a high degree of probability that the ensuing price move is indeed a third wave. Once prices break the lower boundary line of our acceleration channel, then again we know that this is actually a fourth wave pullback. Being a fourth wave pullback, we also know to look for support for wave 4 at either the upper, mid, or lower boundary lines of our base channel here. Okay? So we know with confidence at this point that this is a wave 1, 2, 3 into the high. Now I don't have much price action to work with here with regard to the deceleration channel, but just to kind of give you a rough idea, it will encompass the bulk of wave 4 because again, corrective price action or a counter trend move tends to be contained by parallel lines. And again, you saw how the base channel lines actually provided support for this fourth wave pullback. Once wave 4 is complete, and the way we know the fourth wave is complete is when the upper boundary line of the deceleration channel or the corrective price channel is penetrated. So we knew wave 4 was complete when prices opened up the next day, which is what they did. And then we simply use our traditional terminating channel to identify resistance for wave 5. Now in this instance here, as you can see, prices penetrated the upper boundary line of our terminating channel. That's referred to as throwover and will sometimes occur as it did in this instance. But by using the channeling technique, what you can actually do, it can clarify unclear wave structure. When prices begin to break out of the base channel, you know that a wave 3 is in progress. When prices penetrate the lower boundary line of the acceleration channel, you know that wave 4 is in progress. When the upper boundary line of the deceleration channel is penetrated with confidence, you know that wave 5 is in progress. And then as wave 5 begins to develop, you can identify resistance in this instance for wave 5 by utilizing the terminating price channel.
شكرا لك على مشاهدة الفيديو. من فضلك دع لايك واشتراك في القناة تشجيعا لنا على تقديم الأفضل في القادم إن شاء الله.